Well, it's official. Investors are freaking out. Inflation is running rampant. The Federal Reserve is frantically trying to raise rates in an effort to try and stop this inflation. Multiple retail companies like Target and Walmart recently reported low earnings and their stock price has been hit hard. Every major news outlet is spewing article after article claiming the recession is coming. But let's just stop for a second. Is this really the time to freak out? Is this going to be March of 2020 or the 2008 recession all over again? We don't have banks failing left and right on a daily basis. We don't have millions of homes being foreclosed on throughout the country. And we aren't currently dealing with a brand new virus that potentially would have significant impacts on our global economy. So now that we're done freaking out, let's talk about the amazing deals out there right now. I've spoken at length about why dividend investing is a great way, the best way to invest. But the truth is, when we enter times when there's a lot of market volatility, we're potentially on the brink of a recession, the last thing we want to be thinking is the dividend going to be cut on the investments that I own? So with that in mind, we want to look at dividend stocks. We always want to own at least a good portion of our portfolio, dividend stocks that have very safe dividends. And for me, this is a combination of both how long have they been paying dividends, just for a few years or 25, 35, or 50 years, and then additionally looking at what is their payout ratio based on free cash flow, specifically the dividends that they pay compared to the amount of free cash that they have as a business. So with that in mind, we're going to look at 5 dividend stocks here that are trading at a very deep discount right now, that have a long history of paying a consistent and increasing dividend, and they have really low payout ratios based on free cash flow. We're going to look at these from lowest dividend streak to highest, but I made it a point to look at only dividend stocks that have been paying dividends since at least prior to the 2008 financial crisis, which would be 14 years. The first stock we're going to look at here is Prudential Financial. Ticker symbol is PRU. They are in the financial sector of the economy. Like I said, a 14-year streak of paying a dividend every year and increasing that dividend every year, which makes them a dividend contender. Their price on May 17th is $103.96 per share. They also have really healthy dividend growth rates, the measure by which they increase their dividend every year. On the most recent year, it was only 4.5%, but that's still a pretty strong dividend growth rate. And historically, over the 3-year, 5-year, and 10-year, they've been at 7.9%, 10.3%, and 12.4%. Their current yield is 4.62%, which is a really strong yield. Their average 5-year yield is a little bit higher at 4.8%. Year to date, you can see that Prudential is down about 8.2%. Their high for the year was right around $121 per share, and it's down to right around $100.91 per share as of the making of this video. You can see that their payout ratio based on free cash flow over the past year is 6.16%, which is very healthy, and it's got an annual dividend of $4.80 per share. Of the 5 different dividend stocks we're looking at in this video, this is probably the one that I'm least likely to add to the portfolio, not because it's a great fit, but because I've already a little bit heavily weighted in the financial sector of the economy, and I do want to branch out a little bit in different directions. All right, second dividend stock we're looking at here is Best Buy Company, BBY. It's in the consumer discretionary sector of the economy, and it's got a dividend streak of 19 consecutive years, which makes it a dividend contender. One of the reasons why I'm heavily looking at Best Buy right now is on the year to date, it is down 28%, down to $73 a share from its high, which was right around March of 2022, of $110 per share. One thing I really like about Best Buy is their dividend growth rate here. Their 1-year dividend growth rate over the past year was increased 26.8%. The 3-year growth rate is 17%, the 5 year is 20%, and then the 10-year is 17%. Their dividend growth rate currently is 4.17%. Now this contrasts significantly with their average 5-year dividend yield, which was only 2.7%, which is a variance of 52%. This is a dividend stock I'm looking closely at to add to the portfolio. One of the biggest reasons why is because I'm definitely weighted heavily in the financial sector of the economy, not just in banks specifically, but different sectors of the financial sector of the economy. And I like the overall health of Best Buy and also the fact that it's in the consumer discretionary sector of the economy with all of these great numbers. Their payout ratio for the previous year is 21.69% based on free cash flow, and an annual dividend of $3.52 per share. We're here on Morningstar's website on their key ratios data for Best Buy. We can see some swings in their free cash flow per share over time, but we can see that it's more than enough to cover their dividend every single year, which is right up here. Next up, we have the First of Long Island Corporation, FLIC. This is also in the financial sector of the economy, and it's also, for full disclosure, a stock in my own portfolio. It's been raising dividends every year for 26 consecutive years, which makes it a dividend champion. As of May 17th, the price was $18.81 per share, and it's got very consistent dividend growth rates. They're not amazing, but they're strong, and they grow every single year at a very consistent pace. 5.3% over the previous year, 6.2% over the 3-year growth rate, 7.4%, and then 6.9% over the 5 and the 10 years. Current yield, 4.25%, which exceeds their average 5-year dividend yield of 3.4%, which is a 26.2% variance. Year-to-date, First of Long Island Corporation is down 17.45%, which makes it a great buying opportunity right now. You can see that their payout ratio based on the most recent year is 41.03% based on free cash flow, which tells me, number one, that it can raise its dividend consistently every year, and that it's healthy and not likely to be cut anytime soon. That annual dividend is 80 cents per share. And you can see, based on looking at the free cash flow per share historically over the trailing 12 months, 2021 and back to 2018, very consistent here. All right, this fourth dividend stock is one that I'm looking at very closely in addition to Best Buy, and that is T. Rowe Price Group, ticker symbol TROW. It's in the financial sector of the economy and has been raising its dividend consistently every single year for 36 years, which makes it a dividend champion. Current price per share as of May 17th was $125.67. This is one of the biggest reasons I like T. Rowe right now. Current price is $122.55 per share as of right now as I'm making the video. This is down 37% from its year-to-date highs, which was way up here nearly $200 per share. Now we're down here to $122 per share. It has really consistent dividend growth rates over the 1, 3, 5, and 10 years. We've got 17.5%, 15.8%, 15.2% over the 5-year, and then 13.3% over the 10 years. Current yield is 3.82%, which is significantly higher than its average 5-year yield of only 2.7%, which is a 41% increase. And its payout ratio based on free cash flow is 57.42%. Much lower than my top threshold of 85%. That annual dividend is $4.80 per share. I can say with near certainty that T. Rowe Price Group is one that I'm going to be adding to the portfolio. I won't be able to get to a 100 share lot so I can start selling covered calls, but at this discount and that dividend growth rate, I have to get in. All right, last dividend stock we're looking at here is Aflac Incorporated, AFL. Also in the financial sector of the economy. It's been paying dividends and increasing them every single year for 40 years now, which makes it a dividend champion, and once it gets to 50 years, it will be a dividend king. Current price per share as of May 17th was $57.24. Now, Aflac is not quite as on discount as the other dividend stocks here. It's only down here to date about 4.5%, but it's still a really great opportunity to pick up a very safe dividend stock. There are really strong dividend growth rates here, 18.8% over the 1 year, 9.8% for the 3 year, 10.6% for the 5 year, and 8.2% for the 10-year growth rate. Current yield is only 2.8%, but it has an average 5-year yield of 2.4%, so it's higher than its average 5-year yield. And this is one that I personally own in my own portfolio, and I sell covered calls on it. The payout ratio based on the most recent year on free cash flow is 19.09%, and it's got an annual dividend of $1.60 per share. If we look at the trending on the free cash flow per share over the last 4 or 5 years, very consistent, $7.45, $8.38, $7.24, $8.29, and $7.14 back in 2018. Remember, when we own dividend stocks and we come across recessionary times, bear markets, when there's a lot of fear and anxiety, volatility in the markets, we want to make sure that we're confident in our underlying holdings in the portfolio. Do we feel confident that these dividend stocks will continue to pay a dividend and raise it every single year? This is when we have opportunities to buy quality dividend stocks with long-standing dividend histories at a discount. Why would we not take advantage of that? Make sure to leave your 2 cents down in the comments below. I respond to all comments received on the day I post a video. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.